A seller hands you one page. At the top, profit, $41,000. Underneath it, a list. 6 lines. They are called add backs, and they push that number from 41,000 all the way to 94,000. 3 of those 6 lines are real. 3 of them are not, and nobody in the room is going to tell you which is which. Start with this, because it matters. Add backs are not a scam. They exist for a real reason. A tax return is written to make profit look as small as the law allows. That is its job, and it is legal. But you are not buying a tax return. You are buying what the business will actually put in your pocket. So some expenses on that return get added back because they are the current owner's choices, not the business's costs. If the owner runs his phone bill through the company, that is his choice. Yours might be different. That line genuinely should not count against you. Last time we kept it to 2 lines. Profit plus the owner's own salary. A real seller's sheet is longer than that, and every single line on it is a claim. Somebody is asserting that this expense should not count against you. Your job is to test them one at a time. You already know the main test. Would I still pay this if I owned the business? If the answer is no, it is an add back. If the answer is yes, it stays an expense. That rule handles most of the sheet, but sellers pad the list exactly where that question turns fuzzy, so you need 3 follow-up questions. 1. Does it come back every year? Because anything that repeats is not a surprise, it is a cost. 2. Does the work still need doing after the sale? Because if it does, somebody has to be paid to do it, and that somebody might be you. 3. Is it really the owners, or is it the business's? Because the label on an expense is not the same as the truth about it. Keep those 3 in your head. Now let's walk the 6 lines. Line 1. The owner pays himself $20,000 a year. Add it back. You are buying the right to that job, and how you choose to pay yourself is your decision, not a cost of the business. This is the largest add back on almost every small deal, and it is completely legitimate. Line 2. Family health insurance, $8,400 paid by the company. Add it back. That is a household expense running through the business. It walks out the door with the owner. Line 3. Depreciation, $3,600. Add it back. Depreciation is an accounting entry, not money that actually left the bank account this year. One caution, and it is a real one. The equipment still wears out. Depreciation is not cash, but replacing a dryer is. Line 4. A one-time equipment repair, $4,500. Ask for 3 years of statements, not 1. If a one-time repair shows up in all 3 years, it is not one time. It is maintenance wearing a costume. Test 1. Does it come back every year? It does. Reject it. Line 5. $14,400 paid to the owner's wife for keeping the books. Test 2. Does the work still need doing? Somebody has to keep those books after the sale. If that somebody is you, it costs you your evenings. If it is a bookkeeper, it costs you money. Either way, it is a real cost of running this business. Reject it. One fair exception and brokers will raise it. If she were paid far more than the job is worth, the extra above market rate would be a legitimate add back. $14,400 is about what the work costs. So the whole line stays an expense. Line 6. The truck. $2,100. Test 3. Whose is it really? If that truck picks up supplies 4 days a week, it is the business's truck and it stays an expense. If it mostly sits in a driveway, it is the owner's. And if it is genuinely half and half, then half the payment is a fair add back. That is how a broker will argue it, and they are right to. This one runs supplies 5 days a week, so none of it comes back. Reject it. 3 lines rejected. $21,000 of that sheet does not survive contact with 3 questions. That is 40% of the add backs, and it does not make the seller a liar. The earnings you were shown were $94,000. The earnings you can actually defend are $73,000. Now use what you learned last time. Price is earnings times a multiple. At 3 times earnings, 94,000 asks for $282,000. 73,000 supports, $219,000. $21,000 of padding just became $63,000 of price. That is why this page matters more than almost anything else in the folder. One warning in the other direction, because this is where beginners overshoot. Rejecting every add back is just as wrong as accepting every one. An owner's salary really does come back to you. Personal health insurance really does leave. If you strike the whole list on principle, the number you build is too low, your offer is not competitive, and you lose a good business to somebody who did the work properly. The goal is not suspicion. It is arithmetic you can defend. So say one sentence out loud. Show me the backup. Every add back should have a document behind it, an invoice, a payroll record, a bank statement. If a line cannot be documented, it does not go into your math. A seller with real add backs hands the folder over. How they react to that question tells you as much as the paperwork does. Add backs are not dishonest. Some of them are the most honest numbers on the page, but every one of them is a claim that somebody else made about your money. Now you can test them, one line at a time.